accounting. Accounting is often called the language of business because it systematically records, classifies, summarizes, and communicates financial information. It's crucial in ensuring that business, government, and other organizations operate efficiently and transparently through accounting stakeholders such as managers, investors, creditors, and regulators can make informed decisions based on the accurate financial data. Friends, we are from PU to up to now, we are teaching accounting, accounting, and accounting. So friends, please we will go back. Subsidiary books in accounting. Subsidiary books in accounting, also known as books of original entry, are specialized journals where specific types of transactions are first recorded before being posted the ledger. Friends, the most commonly we'll call it as subsidiary books, purchase book, sales book, purchase return book, sales return book, cash book. Out of that, single column cash book, double column cash book, triple column cash book, bills receivable book, bills payable book, journal proper. Friends, with that, this is the basic thing. Without these things, we can't move. We can't teach the what accounting. Accountancy is a subject. Accounting is what? It's a business language. It's a subject. It's a world. So, identifying and recording the transaction, preparing the journal entries, posting to the ledger, generating the adjusted trial balance report, preparing worksheets, preparing adjustment entries, preparing financial statement, closing the books of accounts. With these, the accounting cycle, we are starting what? Preparing the what? For journal entry two, preparing the trading and profit and loss account and financial statement. Finally, balance sheet. Financial statement which includes fund flow, cash flow, and so on. So friends, today we are going to discuss with the emerging issues in accounting. Firstly, forensic accounting, government accounting, third one is non-government accounting, project accounting, social accounting, international accounting, cloud accounting, drone accounting. Forensic accounting is a specialized branch of accounting that involves the use of accounting, auditing, and investigating skills to examine financial records to uncover fraud, embezzlement, or other illegal financial activities. Forensic accountants analyze, interpret, and summarize complex financial and business matters, often working with the legal professionals and provide evidence in court cases or regulatory investigations. The key functions of forensic accounting. Number one, fraud detection and prevention. Forensic accountants investigate financial discrepancy, identify fraudulent activities, and provide evidence to support criminal or civil cases. They often uncover fraudulent schemes like embezzlement, financial statement manipulation, bribery, or insider trading. They may also design systems and control the prevent fraud in organization. Second one is litigation support. Forensic accountant assists legal teams by quantifying damages, losses, or other financial implications of legal disputes. They help attorneys understand the financial aspects, of a case and may testify as expert witness in court. Examples include cases involving breach of contract, business valuation, shareholder disputes, or bankruptcy. Court cases, accounting fraud, or it is going to be handled litigations for. Third one is insurance claims. Forensic accountants are often called upon to evaluate insurance claims related to property damage, business interruption, or loss of income. They assess the accuracy of claims to ensure they align with financial records and the insurance policy terms. Fourth one is business valuation and asset tracing. In diverse settlement, mergers, or bankruptcies, forensic accountant trace hidden assets or evaluate their market value of business or properties. This information is critically determining equitable settlement of compensation. Fifth function is money laundering investigation. Forensic accountant plays a crucial role tracking the flow of illicit fund in money laundering schemes. They analyze financial transactions to identify suspicious activities that suggest the movement of illegally obtained money, illegally amount transferring. So sixth one is bankruptcy and insolvency. In case of bankruptcy or insolvency, forensic accountant investigate the causes of financial collapse, assess the accuracy of financial records, and help trace the missing assets to ensure creditors receive fair compensation. Government accounting. Government accounting is a specialized branch of accounting that focuses on managing and recording the financial activities of public sector entities such as federal, state, and local governments. Its primary objective is to ensure that public funds are properly accounted for, managed, and spent in accordance with the legal regulations and budgetary constraints. Unlike private sector accounting, which focuses on profitability and financial performance, government accounting emphasizes transparency, accountability, and stewardship of public resources. Functions of government accounting. The key functions of government accounting focus on the efficient management of public resources, ensuring transparency, accountability, and compliance with legal financial regulations. These functions are crucial for operation of government entities at all levels, federal, state, and local. Below are the primary functions. Number one, financial reporting. Government accounting is responsible for producing accurate and timely financial reports that provide a clear picture of government financial status. These reports, including balance sheets, income statements, and fund reports, offer transparency to citizens, legislators, and other stakeholders. Financial reporting also aids in decision making by government officials and policymakers as they need to evaluate how funds are being used and whether financial resources are being efficiently managed. Number two, public accountability and transparency. One of the core functions of is to be ensure accountability for how public resources are managed. Government entities must provide accurate records of their financial activities to demonstrate that funds are being used appropriately. Transparency is critically in building public trust as citizens have the right to know how their taxes are being spent. This involves open access to financial report, disclosure, and performance evaluation. Fund management, revenue and expenditure of government. Government entities use fund accounting to manage different streams, revenue and expenditures. Each end is established to track resources designated for specific purposes such as education, infrastructure, or healthcare. This function ensures that each fund is properly managed with revenue and expenditure accurately recorded to maintain financial integrity and accountability within each fund. Expenditure monitoring and control. Government accounting systems closely monitor spending to ensure it aligns with budgetary allocations. This function prevents overspending and helps to avoid budget deficits. It also includes ensuring that expenditure meet the goals of public programs and comply with the legal restriction on how funds may be used. Fifth one is audit and internal control. Government accounting helps establish the maintain internal controls that prevent fraud, mismanagement, and errors in financial transactions. Internal controls include policies and procedures that safeguard assets and ensures accurate financial reporting. Regular audit, both internal and external, assess the accuracy of financial records and the effectiveness of internal control. Government accounting supports these audits by providing the necessary documentation and ensuring the compliance with auditing standards. Non-profit accounting refers to the accounting practices and financial management system used by non-profit organizations such as charities, educational institutions, religious organizations, and healthcare providers. Unlike business that focus on profitability, non-profits aims to fulfill mission or cause, and their accounting reflects this unique purpose. Non-profit accounting emphasizes accountability, transparency, and the proper use of funds according to donor restriction and legal requirements. The key functions of non-profit accounting revolve around ensuring that resources are managed responsibly and transparently to support the organization mission. Non-profit organization must adhere to the specific accounting practices to maintain financial accountability and compliance with the donor and regulatory requirements. Here are the primary functions. Number one, fund accounting. Fund accounting is essential to non-profit accounting. It involves managing and tracking the use of funds that may have different restrictions, such as general operating funds or specific purpose funds. Each fund is accounted for separately, ensuring that donor restricted contributions are used for their intended purposes. These functions help non-profit profits maintain accountability for the diverse revenue resources they manage, such grants, donation, and membership fees. Number two, donor and grant management. Non-profit receives the funds that may come with restriction on their use. These functions involve ensuring that donations and grants are used according to donor specification and that non-profit remain in compliance with the term of grants. This also includes proper documentation and reporting back to donors or grant agencies on how their contributions were spent with help build trust and maintain future funding. Third one is building and financial planning. Non-profit accounting includes preparing detailed budgets that outline expected revenues and expenses. This functions helps ensures that organization stays financially stable and aligns spending with mission and strategic goals. Budgeting also involves forecasting future needs, assessing financial risk, and making adjustment to ensure long-term sustainability. Fourth one is internal control and fraud prevention. Non-profit organization must implement internal controls to prevent fraud, misuse of funds, and accounting errors. This involves establishing policies and procedures for handling cash, approving expenditure, and segregating financial responsibilities. Strong internal control helps safeguard the organization assets and ensures accurate financial reporting. Project accounting, also known as job cost accounting, is a specialized form of accounting that tracks the financial performance of specific projects, unlike general accounting, which focuses on overall financial health of an organization. Project accounting zeroes in on the cost, revenues, and financial outcomes of individual projects. Functions of project accounting. Number one, cost tracking and allocation. Project accounting monitors and allocates cost associated with a specific project. This includes direct costs, example labor, material, and indirect costs, example overhead expenses. It helps in breakdown cost by phase or work stream, enabling better cost control and analysis of profitability of each stage. Number two, revenue recognition. It ensures proper revenue recognition based on work completed, which is especially important in long-term projects. This might involve percentage of completion methods, milestone based on recognition, or other strategies depending on the contract. Third one is time tracking and billing. For time sensitive projects, project account integrates time tracking systems to monitor labor cost in time and materials contracts. This is the critical accurate client billing. It ensures that billable hours and expenses are properly recorded and billed. Fourth function is project profitability analysis. By consolidating all the revenues and expenses related to a project accounting helps assess the overall profitability of the project. This includes both direct distributions and overhead allocations, offering insights into whether a project is financially viable. Next, social accounting. Social accounting, also known as social environmental accounting or CSR, corporate social accounting, refers to the process of measuring, monitoring, and reporting an organization social, environmental, and ethical performance, unlike traditional accounting, which primarily focus on financial metrics. Social accounting evaluates the broader impact of an organization operations on society and the environment. It seeks to hold organization accountable not only the shareholders but also the stakeholders include employees, customers, community, and the environment. Functions of social accounting. Number one, measuring social and environmental impact. Social accounting quantify the impact of an organization activities on society and the environment. This may include measuring factors such as carbon footprint, resource consumption, community engagement, and employee well-being. These measurements provide insights into how sustainable and responsible the organization is in its operations. Number two, the financial reporting. Organization use social accounting to report non-financial information such as their environmental sustainability efforts, human rights practices, or contribution to their community development. This reporting can be done in the form of CSR reports. Sustainability reports are integrated reports that combine financial and non-financial performance. Number three, supporting decision making for social responsibility. The data gathered through social accounting inform management and decision makers about the effectiveness of CSR initiatives and sustainability strategies. This allows companies to refine their policies, allocate resources to social programs, or mitigate negative environmental impacts. Fourth function is corporate reputation management. By consistently reporting on social and environmental performance, organization can enhance their public image and build trust with stakeholders. Social accounting demonstrate commitment to corporate citizenship and can improve customer loyalty and investor confidence. Fifth function is sustainability, benchmarking, and comparison. Social accounting enables organizations to compare their sustainability performance with industry standards, competitors, and global benchmarks, such as the UN Sustainable Development Goals. It allows business to identify areas for improvement and adopt best practices for sustainable development. International accounting. International accounting refers to accounting standard principles and practices that apply financial transaction and reporting across multiple countries or jurisdictions. As business increasingly operate globally, international accounting provides a framework to ensure consistency, transparency, and comparability of financial information across the border. It involves adopting accounting systems to meet the diverse legal, economic, and cultural context of different countries. Functions of international accounting. Number one, harmonization of financial reporting standards. One of the primary functions of international accounting is to harmonize accounting standards globally. This is largely done through the International Financial Reporting Standards, IFRS, which provide a consistent set of guidelines for financial reporting. The IFRS is used by over 140 countries and aims to reduce discrepancies between national accounting standards, making it easier for stakeholders to compare financial statement across the borders. Number two, Compliance with local and international regulation. International accounting helps business comply with both local accounting regulations and international accounting standards, such as IFRS or US Generally Accepted Accounting Principles, GAAP. This dual compliance is necessary when multinational companies operate in multiple countries with different accounting rules. Foreign currencies translation. Companies operating internationally often conduct transactions in multiple currencies. International accounting provides method to account for fluctuations in foreign currency exchange rates. When converting financial statement into a common currency, this process is governed by specified standards, such as Indian Accounting Standards 21. The effects changes in foreign exchange rates to ensure accurate reporting. Fourth function is consolidation of multinational financial statement. When a parent company has subsidiaries or joint ventures in other countries, international accounting consolidates these diverse financial statements into a single comprehensive report. This requires converting financial data from various accounting systems, currencies, and regulatory framework into a standardized format. Fifth function is facilitating global investment. International accounting helps attract global investors by providing transparent and comparable financial statements. Investors need reliable data to assess the performance and risk of companies in different countries. Standardized reporting through IFRS, for example, allows the investors to make more informed decisions about international investments. Cloud accounting refers to the practice of using accounting software that is hosted on remote server rather than installed locally on computer or server. This allows business to reform accounting tasks and access the financial data over the internet from anywhere at any time with any device connected to the web. Cloud accounting systems are increasingly popular because of their flexibility, cost effectiveness, and ability to streamline financial management. Functions number 1, real-time financial data access. Cloud accounting provides real-time access to financial data and reports. Since the software is hosted online, multiple users can access the up-to-date financial information simultaneously from different locations, allowing for quicker decision making, improved collaboration. Number 2, automation of accounting process. Cloud accounting automates many routine accounting tasks such as invoicing payment, reminders, bank reconciliation, and expense tracking. This reduces the manual record, increases accuracy, and free up time for finance teams to focus on more strategic activities. Third function is source data storage and backup. Cloud accounting platforms store data is highly secure. Encrypted cloud environments. They also offer automatic backups, reducing the risk of data loss due to the hardware failure or other issues. Cloud service providers typically have robust security measures in place to protect sensitive financial information. The fifth function is automatic software updates. With the cloud accounting, the service provider manages the deploys software updates automatically. This ensures that business always have access to the latest features, improvements, and security patches without the ending the manually install, update, or deal with downtime. The last function is mobile accessibility. Most cloud accounting platforms offer mobile app that allow users to perform key accounting functions on the go. This includes tracking expenses, invoicing clients, viewing reports, and even approving the transaction. Mobile accessibility increases productivity by allowing access financial data from smartphone or tablets. Drone accounting is a relatively new concept that refers to the use of drones for accounting related functions, particularly in industries where data collection in hard to reach or expansive areas is critical. While drones do not perform accounting tasks directly, they facilitate certain accounting process by providing accurate real-time data that can improve financial reporting, recovery management, asset valuation, and compliance. This technology is especially useful in sectors like agriculture, construction, mining, logistics, and insurance. Functions of drone accounting. Number one, asset valuation and verification. Drones can use to survey and inspect physically asset to such as building, equipment, and land. High resolution images and real-time video captured by drones allow accountants to verify the conditions and value of these assets without needing to rely in time-consuming manual inspection. This is particularly useful for auditing large-scale infrastructure, machinery, or land holding. Inventory management and auditing. In industries with large dispersed inventories, such as agriculture or warehousing, drones can be deployed to perform inventory counts and audits. They can scan barcodes, RFID tags, or use image recognition software to track inventory levels, ensuring accurate record, keeping and helping business maintain the control over stock. Real-time data collection and financial reporting. Drones provide real-time data on physical assets, resource usage, or environmental conditions, which can when we use it date financial report. This is particularly useful for companies involved in resource extraction, means mining, oil and gas, or agriculture, where understanding the current state of operations can directly affect the cost accounting and financial forecasting. Fourth function is environmental compliance and sustainability reporting. Many companies are required to monitor their environmental impact as a part of regulatory compliance or corporate sustainability reporting. Drones equipped with specialized sensor can monitor environmental conditions such as pollution levels, deforestation, or land degradation. The data collected can be incorporated into environmental accounting reports, demonstrating compliance with environmental regulations and sustainability commitments. So after that, friends, at present, there are some accounting softwares. We'll go through one by one. A QuickBook Online, Xero, Zoho Books, Stage Intact, FreshBooks, NetSuite ERP, Odoo, Tally Prime, Shahu. We'll go through one by one. QuickBook Online, a popular choice for small to mid-sized business. QuickBooks offers cloud-based solution for accounting tasks, including tracking expenses, invoicing, and tax preparation. It also provides mobile app and can integrate with a wide variety of other business tools. This app can be used in smartphones. Xero, another cloud-based accounting software. Xero is favored by small business for its simplicity and powerful features. It offers bank reconciliation, invoicing, inventory management, easy to use, and has strong integration with third-party application. Zoho Books. Zoho Books is a part of Zoho suite of business app and offers comprehensive features like invoicing, bank reconciliation, project management, and inventory management. It's an affordable solution, especially for small business. Stays intact. Stays intact is aimed at medium-sized business enterprises. It offers advanced accounting features, including multi-currencies, multi-entity management, and comprehensive reporting tools. Stays intact is also known as for its scalability and in-depth financial analytics. Wave is a free accounting software solution that offers invoice expensive tracking, that receipts scanning. It's a design for freelancers, consultants, and very small business with basic accounting needs. FreshBooks is often used by freelancers and small business owners, offering easy to use invoicing, time tracking, expense management, and project management. It integrates with several third-party apps for added functionality. NetSuite ERP. NetSuite ERP is a comprehensive enterprises resources planning ERP system that includes accounting functions. It's highly and is designed for larger business with complex financial needs. It offers financial management, inventory management, and compliance tools. Odoo is an open source software that provides accounting CRM and ERP capability in a single platform. Its accounting features include bank synchronization, invoicing, and double entry accounting. Odoo is modular, allowing users to add features is needed. Tally Prime. Tally Prime is a popular choice in regions like India, known for its simplicity, handling accounting, inventory management, and tax compliance. It is suitable for small and medium-sized business looking for easy navigation and compliance with regional tax laws. Shimoga is a cloud-based accounting software known for its simplicity and ease of use, designed for small business owners. It provides features such as invoicing, expense tracking, and basic reporting. The diverse field of accounting, including forensic accounting, government, non-government, project, social, international, cloud, and drone accounting. So, the adaptability of accounting practices to various industries and objectives. Each specialization has critical functions such as fraud detection, financial integrity, transparency, and sustainability, while technological advancement like cloud and drone accounting are revolutionizing the process through the automation and real-time data access together. These branches ensures compliance, accountability, and informed decision making, shaping the future financial management across business, government, and non-profits. Thank you, one and all. It's a time for discussion.
Good afternoon, sir. Good afternoon, sir.
Good afternoon. Sir.
Sir, this is Dattatreya, sir, from Government First Aid College, Dharwad.